Hi, it's Mike with AskTractorMike.com. We have the third quarter tractor and combine sales numbers out from the Association of Equipment Manufacturers. And I want to go over those numbers today. While they're bad, they're not as bad as we started out the year. And I'm speaking today with Kenny, who is corporate sales manager at S&H Farm Supply, has 6 locations in southern Missouri and the place I used to work. And he's also on the board of directors of FCS Financial in Missouri. And so he's kind of uniquely positioned to give us some analysis, both on the small end of the tractors and mid-range and the lower end of the high horsepower where S&H participates, and on the big stuff that people farm with. So Kenny, welcome today. I'm going to put the numbers up on the screen here. And again, we want to thank the Association of Equipment Manufacturers. And you just look at these numbers, we're down in all categories, but I want to temper this just a little bit and say that we've actually gotten a little bit better in some classes from where we started out. I'm going to put a graphic up here that shows where we were in the first quarter, and we'll compare first quarter versus third quarter. But in the first quarter of this year, I mean, it looked like a absolutely disastrous year coming. We were down double digits in every category and at the low end of decade-long sales numbers. Right now, we've kind of come back a little bit, and I'm going to put back up here. This is this year's sales numbers. When you look at them year to date, on the under 40, we're 99,000 versus 106,000 last year. That's down, but it's not down that much. Mid-range, we're at 39,000 versus 40. I mean, that's almost within the margin of error. Now, when you get in the bigger stuff, it's a little rougher. We're at 13,000 in the 100 plus horsepower. We were at 17,390 last year. So that's a pretty big drop. Four-wheel drive articulated tractors have fallen off the face of planet Earth. They're way down, and so are combines. But again, that combine number down almost 40% from last year. We were down 56.5% in the first quarter. So overall, Kenny, are things getting just a little bit better, at least in the non-farming area of the equipment business?
Well, I think, Mike, we had a couple of things going on. We had a hard fought national election in the fall of 24. And I think Q1 of 25, Q2 of 25, we were going through a wrestling match. We're all going to die, and it hurt a lot. There was tremendous uncertainty. There were trade wars. There were tariff announcements. There was the Fed and the administration chucking rocks at each other, and we were seeing interest rates be pretty stubborn. We still have some pretty stubborn inflation. The Fed is to signal a little softer monetary policy, even though it's not impactful in quantity. And we make decisions very emotionally, and I think what you're seeing when you look at Q3 tractor numbers, I think the quote that we want to remember is the laws of economics are never going to be repealed. So the things that we knew, we knew that the job market's pretty steady. We knew that the off-farm income is stable. We know that cattle prices are at all-time highs. And so there's no reason why those lower and mid-range tractors should be significantly off, other than we just don't feel like buying one right now. We have the ability to buy them if we want to. And we've largely accustomed ourselves to the price positioning now. There really aren't any bargains in the market. Um, Data is out, clear information is out there. Manufacturers know it, customers know it, dealers know it, and so it's really deciding what you want to buy, where you want to buy it. There's not large economic differences, and there's not really large feature differences most of the time.
I'm going to put up a graphic there on the screen that is specific to each horsepower class. And we're going to start out with the under 40 range. And we've got an orange line and a blue line. And the blue line is sales, and the orange line is inventory. And we're going back to 2019 because that's the last year before COVID hit and that crazy market happened. You do notice on the blue line a downward trend since 2021. How concerned are you about that?
Um, some, but not greatly. I think that market is stable. I think this is probably the market that's most impacted by global trade wars. And so none of these tractors are manufactured domestically. So depending on what country their components or they're manufactured, where they're assembled, that's disrupting the supply chain somewhat in this particular market segment. And so as we go forward, you're going to see some brands probably have advantages just because of where they're sourced.
The inventory levels aren't high enough that you're gonna see gigantic discounts. I always think about this as a customer. If there's a oversupply of inventory, I can look for bargains. We're about where we need to be, I think, from a manufacturer standpoint, don't you?
This conversation probably is somewhat of a continuance from the COVID years. But if you're in the market for a tractor today, you sure want to buy one that's on the lot because the next one that comes is probably going to cost more. And that's not a function of anything nefarious. It's just truly the fact that manufacturers kind of swallowed hard in 2024, early 25, and they said we're gonna try to keep from passing along these price increases. We're going to be as competitive as possible. Now they've recognized they just can't swallow it. We're going to see the price increases come as they need to. They're going to build in the margin they need for their company to be stable, and that's going to be the price.
Kenny, I remember back to when we had freight issues and diesel had surged in price. This is back when I was working at the dealership, and we would have fuel surcharges as stuff hit the ground. And I remember we had 3 bush hogs side by side on the lot that came in at different times, all same identical product, rolled down the same line, 3 different prices based on the fuel surcharge. And it was a nightmare trying to keep up with pricing. Are we headed there? Or are we there now on tractors and everything? Everything is made overseas.
Yeah, I mean, we saw a lot of that even in to date in 2025. There's been a lot of moving around, as the tariffs have changed and manufacturers tried to figure out how to administer tariff issues. And we're going to see a little bit more of that. I think most of them have developed a stabilized plan now on whole goods that we know what pricing is going to be. I don't expect a lot of surcharges or below the line price differences. I think most of it's built into the invoice prices now, and it'll just be dependent on what companies do on programs.
So in the 40 to 100 horse range, we see declining sales from previous years, but we're right now pretty close to where we were last year. And Kenny, I want to put a graphic up here. I never talk about just monthly numbers. I look quarter to quarter because I think it's more indicative of trends. But if you look at the September numbers, something happened on tractor sales on anything under 100 horsepower. What's your take there?
Something really moved there, you know. Um, and those September numbers, and we see that reflected in our business. Um, but those September numbers, the increases, that's in the 40 to 100. That was a significant move, and it almost brought us back on par for the year. Um, and so, I'm looking at that and thinking, there was not anything that really changed significantly from a manufacturer point of view. So was this a function of just we feel good, the economy, we're getting comfortable with where we are administration wise. Like I said, the laws of economics aren't being repealed. We're pretty healthy. Our 401k looks good. Um, you know, we feel like buying tractors and we are. And I think that's going to continue through year end in this segment. Um, when you look down at that 100 plus horsepower, you're down in September 11.5%. You're down 24% for the year. I think that's the same thing. It's just reflective of that environment where the row crop, the cash grain people are just in a price cost squeeze. And that's just really real.
All righty, let's get to the over 100. What do you see there?
I think it's just the economics of who uses that tractor. Those guys are in probably some of the toughest economic conditions they've had for a decade or more, and uh, we're producing more grain than what we know what to do with. Some of our trade issues are slowing down some exports, uh, and that's just a tough. It's costing them more to operate than they're bringing in income, and they're squeezing tractor purchases, pushing them out a little further. I think there's been a little bit of increased demand in the good used segment as people are substituting used if they have a need versus new in that segment.
When you really see the drop is in articulated tractors. That's not a huge numeric market number of units sold, but it's a lot of dollars. What do you see there?
Same thing, we're in an environment now where size matters, and when you're in a cost price squeeze, the bigger you are, the more it hurts. And so we're seeing a lot of large operations really feel that pressure today because their operating costs are just overwhelming their income stream.
In combine, same thing.
I might the same thing. Those two, you can just ditto those two things.
They pretty much move in tandem. It seems like, definitely the row crop farmers are under duress right now. In that market, how what's your take on where we're headed there? And you have put on your FCS financial cap there. Are you seeing a lot of people struggle to maintain their cash flow and everything in that market?
Yeah, there's a lot of producers that just are experiencing a flat or a negative cash flow, and the renewal season, there are some people challenged to get renewed um, on operating lines of credit. That's impactful to the business. You know, the other part of that is that I think we're in an environment where input costs are not likely to be reduced. And that's there's been other times in the cash grain industry where there's a lot of ups and downs, but there were some things you could do on the cost side, but cost and savings are really hard to achieve today.
As a dealer, where do you think most dealers stand in the market right now, adjusted to a new reality of lower unit volume? And one thing about the people that are in the row crop country, when you don't buy new, you have to have you still have to farm, so you're fixing up your older stuff. And the parts business is good, and generally make more money on parts percentage wise than you do on the whole goods, but it doesn't add up as fast. How's ever dealer absorbing these new changes?
Yeah, I think it's different dealer by dealer, but I think there's a lot of reconditioning going on. The size and scale of these operations, you can probably stretch a year's to use life out of some of this equipment, but you're not going to go much beyond that. You're going to have to find another solution, and I think that's they're reflected in some recent auctions. Is some people have chose to add a second used combine rather than put additional hours on the one unit. Trying to find a different strategy to stretch their equipment's life. And farmers are innovators. They're gonna figure it out. Um, where we're not they're talking about survivors out there who aren't good managers. People out there, they are sharp and they're thinking and they're looking at alternatives and they're going to get outside the box. So the individuals will figure it out. The dealerships will also figure it out. But I think there's a lot of financial pressure in dealerships today. Uh, it's big. It's big dollars, and it takes a lot to capitalize your business.
We'll probably be doing one of these interviews after the fourth quarter in January of next year. Or what do you think we'll be talking about then?
I think we'll be looking at the 40 to 100 horsepower segment, probably um, being pretty positive at year end. I don't think cash crop equipment, the four-wheel drive and combine, I expect kind of where we are to be where we are. Um, the under 40 horsepower, that's typically not a year-end segment. That's typically a Q2, Q3 segment. So I don't expect that to change much to year-end.
All righty, Kenny, thanks for taking time to talk with us today. I appreciate you watching my videos. I would be honored if you would subscribe to my YouTube channel, and you can do that by clicking the mic face icon, and make sure you check that bell so you get notified when I post future videos. Here's a link to my website and the Tractor Fund Store with cool things for sale for the tractor owner that helps support my channel. And here's another couple of videos you might want to watch. Thanks for watching.